Most traders think they understand gold. They watch the headlines, they see the price move, and they assume it's just another chart to analyze. But the truth is, gold isn't like anything else you'll ever trade. It's not just a commodity, it's not a currency, and it's definitely not a meme asset that spikes one week and disappears the next. Gold is the heartbeat of the global financial system. And if you can learn to read that heartbeat, you can trade with more clarity, confidence, and consistency than 90% of people in the markets today. Welcome to the Gold Trading Masterclass. I'm Edward, and over the next few minutes we're going to break down exactly how professionals approach gold, the structure, the psychology, and the macro logic that moves this incredible market. If you've ever wondered why gold suddenly rallies when inflation cools, or why it falls when everyone's shouting safe haven, you're in the right place. And by the way, if at any point you think, I need to learn this properly, you'll find the link to join the full Gold Trading Masterclass right below this video in the description and pinned comment. So let's start with the simplest but most powerful question. Why does gold still matter? Because every time a government spends too much, every time central banks print money, and every time confidence in paper currencies fades, gold quietly reminds the world what real value looks like. It's the one asset that isn't someone else's liability. You don't need an issuer's promise. The metal itself is the promise. Think about the psychology behind that. When investors feel confident in the system, they prefer paper, bonds, stocks, risk assets. But when they start to doubt, when inflation eats away at savings or geopolitics shake the world, they reach for gold. It's a reflex that's been hardwired into markets for centuries. Gold is the world's oldest insurance policy. Now here's what most people don't understand. Gold doesn't simply rise because the world is scary. It rises when trust in policy starts to erode. When traders believe central banks are losing control of inflation. When real yields turn negative. When debt feels unmanageable. That's when the smart money shifts into gold. It's not emotion, it's logic. If you take one thing from this video, take this. Gold follows confidence, not chaos. When confidence in currencies drops, gold climbs. When confidence returns, gold rests. That's the cycle professionals trade. Let's bring this to life. Look back at 2008. The financial system collapses, banks fail, central banks slash rates to zero. Real yields go negative, gold doubles. In 2020, the world locks down, trillions are printed, and real yields hit record lows again. Gold surges past $2,000. Then rates rise, yields turn positive, and gold stabilizes. It's predictable once you understand the pattern. So why do so many traders still get it wrong? Because they chase price, not purpose. They see a rally and assume it's endless. They see a dip and assume gold's finished. Professionals don't think that way. They look at drivers, inflation trends, yield curves, central bank signals, dollar strength, and sentiment flows. The price is just the reflection of those forces. And that's what the Gold Trading Masterclass teaches in depth. How to connect the dots between macro data, policy shifts, and market behavior. Because once you see how these variables interact, gold stops feeling random and starts making sense. Now, before we go deeper, let's talk about the single biggest relationship in this market: gold and the US dollar. People love to say they're inversely correlated, and that's mostly true. When the dollar rises, gold often falls, and vice versa. But the why matters. The dollar strengthens when US interest rates and yields rise relative to the world. Higher yields mean a higher opportunity cost of holding gold, which pays no interest. When those yields reverse, the dollar weakens and gold shines. But there are exceptions, moments when both assets rally together, especially in global crises. Why? Because traders seek liquidity in the dollar and safety in gold at the same time. So, if you ever see gold rising with the dollar, it's not broken logic. It's a signal that fear has entered the system. Professionals notice that instantly. And speaking of professionals, do you know how they actually position around gold? They're not gambling, they use structured frameworks. They monitor central bank balance sheets, they track ETF flows, And they read the commitment of traders report to see where hedge funds and speculators are leaning. When the crowd is extremely long, they prepare for corrections. When the crowd's heavily short, they look for reversals. In other words, they use sentiment data as a compass. Gold trading is as much about reading emotions as reading economics. Here's the irony. Gold is the most emotional market in the world, precisely because it represents calm. It's where investors go when they panic, which means that understanding crowd psychology gives you an enormous edge. You'll learn to recognize when the world's anxiety is peaking and when it's fading, and that tells you where gold will likely go next. Now let's talk about inflation, because this is where most traders either make or lose money. Inflation is the silent tax that erodes purchasing power. Central banks claim they can control it. History says otherwise. When inflation rises faster than interest rates, real yields fall, and that's pure rocket fuel for gold. But when policymakers get aggressive and push rates above inflation, real yields rise and gold loses altitude. It's a constant tug of war between fear of inflation and faith in policy. The trick is to watch expectations, not just numbers. The moment markets believe central banks are losing the fight, that's your signal. You can literally see it in bond markets, when inflation-linked yields diverge from nominal yields. Those moments often mark the beginning of major gold trends. Now, I know some of this sounds technical, but that's why we built the Masterclass, to make professional macro logic simple and actionable. You'll learn exactly how to track these indicators and interpret them like an analyst, not a hobbyist. Speaking of professionals, let's talk about the real giants in this market, central banks. They already hold more than 35,000 tons of gold, and lately they've been buying like never before. China, Turkey, India, Russia, all increasing reserves. Why? Because gold is the one asset no foreign power can sanction or freeze. It's independence in physical form. When central banks buy gold, they're telling the world they don't fully trust the dollar-based system anymore. And when the people who print money start hoarding metal, you should probably pay attention. Now you might be thinking, how does that help me as a trader? Simple. Central bank demand creates a long-term floor. It doesn't make gold spike overnight, but it means that every dip has buyers waiting. Knowing that gives you the confidence to hold positions that others fear. That's another lesson we emphasize in the course: patience. Gold rewards conviction, not reaction. Most traders panic during volatility. Professionals view it as opportunity. When prices drop sharply but fundamentals remain intact, that's not the end of the trend. That's the market handing you better value. Let's pivot to something more practical: trading behavior. Have you ever noticed how gold tends to rally during certain months? It's not coincidence. It's seasonality. Demand rises ahead of India's wedding season, ahead of Chinese New Year, and during periods of portfolio rebalancing in the West. Understanding those cycles helps refine timing. Combine them with macro signals, and you can pinpoint high-probability windows to act. But even more important than timing is mindset. Gold can move fast, $50 up or down in a single session, and that volatility is where emotions sabotage traders. When you feel euphoric after a win or desperate after a loss, you've already lost control. The professionals who survive long-term approach every trade with emotional neutrality. They don't chase. They don't fight the market. They simply align with probability. And here's the beautiful part. Once you learn that discipline with gold, you can apply it to any market. It changes how you think. Right now, we're living through one of the most interesting phases for gold in decades. Inflation remains stubborn, debt is at record highs, and global politics are tense. Central banks are buying, currencies are wobbling, and real yields are volatile. It's the perfect environment for skilled traders, not gamblers, not guessers, but people who understand how to read the macro map. That's why I believe learning to trade gold professionally is one of the most valuable skills you can develop right now. It's not just about profits, it's about perspective. It gives you a lens to see the truth behind markets. And if you want to take that perspective further, to really learn how professionals build, test, and manage gold trades, You'll find everything inside the Gold Trading Masterclass. 24 structured modules, real-world examples, and the exact frameworks institutions use to interpret the metal that defines monetary trust. You'll find the link below this video. Click it when you're ready to move from information to mastery. All right, let's look at how global energy prices tie into gold. This is one of those subtle relationships few retail traders grasp. When oil prices rise, they push inflation higher. That forces central banks to choose between raising rates to cool inflation or holding steady to protect growth. When they hesitate, real yields fall, and gold rallies. The 1970s oil shock proved it. The 2000s commodity boom proved it. And the 2022 energy crisis proved it again. So next time you see headlines about OPEC or energy supply cuts, remember, that's not just an oil story. It's a gold story too. Now let's address a common question. Is gold still relevant in a world of crypto and AI? Absolutely. Digital assets may come and go, but gold's trust isn't digital, it's historical. It's physics and psychology combined. You can't hack it, inflate it, or devalue it with a policy error. That's why even as technology evolves, central banks, institutions, and individuals continue to hold it. In fact, the more digital money becomes, the more valuable physical certainty feels. Gold isn't old-fashioned, it's timeless. At this point, you might realize something. Trading gold isn't about predicting the next headline, it's about understanding how the world responds to those headlines. Every data release, every policy speech, every geopolitical event creates ripples. Gold doesn't react to the event, it reacts to the interpretation of that event. And that's where professionals make money, in the gap between news and understanding. Let's take a quick mental exercise. Imagine two traders. Both see that inflation rose by 0.3% this month. One panics and sells gold, thinking rate hikes are coming. The other knows that inflation expectations were already priced in and that bond yields barely moved. He buys the dip. One is guessing, the other is reading. Which trader would you rather be? That's the level of clarity you'll build through structured learning. It's what separates professionals from the crowd. Before we wrap up this first half, remember this. Gold's price is the world's opinion about trust. It's not random, it's not emotional, it's the collective calculation of billions of decisions. And when you understand the logic behind it, trading stops feeling like gambling and starts feeling like strategy. We're halfway through our journey, and in the next section, we'll explore how traders use technical confirmation, risk management, and psychology to turn analysis into consistent performance. We'll also talk about how you can apply everything you've learned today directly to your own trading process, step by step. And yes, if you're already thinking about joining the full Gold Trading Masterclass, don't wait. The link's right below. Click it when you're ready to take gold trading seriously. Now let's keep going. So we've covered how gold moves with inflation, rates, and sentiment. Now let's look at what separates traders who understand gold from those who just watch it. It comes down to structure, psychology, and discipline, 3 traits that turn information into income. Every professional gold trader has a process. They don't open a chart and hope. They follow a framework. It starts with a macro thesis. What's driving markets this quarter? Are real yields falling? Is the dollar topping? Are central banks signaling a pause? Once they identify the environment, they align that view with technical confirmation. Only when both sides agree do they take a trade. That discipline is what keeps them consistent. Retail traders, by contrast, often skip the structure. They chase candles, read opinions, and act on emotion. But gold's volatility punishes randomness. If you want to survive here, you need a plan. And that's exactly what you'll build inside the Gold Trading Masterclass. Now let's talk about timing. Because even if your analysis is perfect, poor timing will ruin it. Gold often moves in waves, quiet accumulation, sudden breakout, consolidation, correction, repeat. Professionals don't try to catch every tick, they wait for confluence. Maybe RSI resets, price retests a support, and news flow confirms sentiment turning. That's when they act. Less is more. And here's something few mention. Patience pays in gold because of how liquidity behaves. The biggest moves usually happen when no one expects them, during quiet sessions, holidays, or low-volume weeks. That's when big money builds positions. If you can sit still while the crowd loses interest, you'll often be positioned perfectly when the next trend ignites. Let's bring psychology back into it, because gold trading is a mirror of emotion. When fear spikes, gold rallies, but when greed takes over, gold cools. The irony? Most traders feel those emotions in reverse. They get greedy at the top and fearful at the bottom. The professional does the opposite. They buy when the crowd's bored and sell when the crowd's euphoric. That contrarian instinct isn't magic, it's discipline. Inside the course, we show you how to measure that emotion using positioning data, sentiment indicators, and even social media tone. You'll learn to read the market's mood like a language. Another critical skill, risk management, because no analysis means anything if you can't stay in the game. Professionals risk small, scale gradually, and protect capital as aggressively as they chase returns. They understand that gold can move $20 against them in minutes, and they're ready for it. Retail traders blow accounts not because they're wrong, but because they're unprepared. When you master risk, fear disappears. You stop obsessing over single trades and start focusing on long-term execution. That mental shift is what turns trading from stress into strategy. Now, let's zoom out for perspective. Gold's story isn't only about charts, it's about cycles of confidence. History repeats because human nature doesn't change. Every few decades, paper assets dominate until debt and inflation undermine them. Then gold reclaims the spotlight. The 1970s, the 2000s, and now again in the 2020s, the pattern is clear. Right now, global debt is at record highs, interest rate cycles are peaking, and central banks are buyers, not sellers. Add political tension, energy transitions, and digital currency experiments, and you have a perfect storm of uncertainty. That's not doom, it's opportunity for traders who understand how to navigate it. So, what's the next step for you? It's to take what you've learned here and go deeper, to turn insight into action. Inside the Gold Trading Masterclass, we break everything into practical, digestible modules. You'll study how inflation data shapes real yields, how to track ETF and futures flows, how to identify high-probability setups using technical confluence, and how to manage trades through volatility. You'll also develop the mindset professionals rely on: calm, confident, and calculated. No more second-guessing every move. No more emotional spirals. You'll trade with structure, because structure builds consistency. Let's make this tangible. Imagine you're analyzing gold during a central bank meeting. Retail traders panic with every headline. You, on the other hand, know that policy tone matters more than numbers. The Fed sounds cautious. Real yields slip. You spot bullish divergence on the chart. You take a measured long position. Weeks later, gold rallies $100. That's not luck. That's process. Now imagine you're facing a sharp correction. Instead of panicking, you check fundamentals. Central banks still buying. Inflation expectations steady. You add into weakness while the crowd sells. That's how professionals turn volatility into profit. It's all about logic over emotion. Gold rewards patience, intelligence, and courage. And the sooner you master those, the faster you separate yourself from the noise. Before we wrap up, let's revisit something powerful. The reason people trust gold in the first place. It's not shiny metal, it's what it represents. Permanence. Every time technology changes or markets evolve, gold stays the same. That constancy is why traders use it as a compass. When everything feels uncertain, gold's direction tells you what the world truly believes. That's why learning to trade it is so transformative. You don't just understand gold, you start understanding global sentiment itself. So here's what I want you to do. If what you've heard today resonated, if you want to trade smarter, think clearer, and stop guessing, take the next step. Click the link below this video and join the Gold Trading Masterclass inside. You'll get full access to 24 modules covering everything from market structure and macroeconomics to psychology, risk, and strategy. You'll learn how to trade gold the way institutions do, with data, logic, and confidence. And it doesn't matter if you're new or experienced. What matters is mindset. If you're ready to treat trading like a profession, this program was built for you. And remember, every trader faces two paths: keep guessing or start mastering. One keeps you chasing, the other puts you in control. Gold rewards those who choose control. If you found this session valuable, do me a favor: like, share, and subscribe so more traders can discover how to trade gold with logic and discipline. Leave a comment below saying, "I'm ready to master gold," so I know you're part of the next generation of serious traders. I'm Edward, and it's been a pleasure guiding you through this journey. Now go take the next step. I'll see you inside the Gold Trading Masterclass.